Hello, traders. It's Monday, December 30th, 2024. A year is almost to a close. We got one more day. Got New Year's Eve tomorrow, then New Year's Day on Wednesday. Hope everybody enjoys a happy and healthy new year as we head into 2025. Markets sold off a bit today, which was actually great for our account. Our trading account was up on the session today, so it's nice to see. I think the market's overvalued here. It's probably 10% at least overvalued from where it should be. I think a pullback totally fine. To see, is that mean that's going to happen today and just continued selling, or is just this a normal pullback and we move higher? I don't know if we need a 10% correction or not, but I certainly think that that would not be the worst thing for the investing account, the lazy trader account. That would be a blessing. I hope we get a 10% dip in the overall market because that's going to give us an opportunity on our investing accounts to just start loading back up on the Qs, VOO, and some quality names that hopefully sell off 10, 20% or more. But if we're trading in a trading account, it doesn't really matter what the market's doing because we're here to generate income on a regular basis, and we're having our best month of trading ever. So I'm going to share a few things with you today on the markets. I'm going to show you two trades. I think I hold up one finger. Just going to show you two trades today. One on ES that we put on today. Kind of an at-the-money 111 trade, very similar to a Jade Lizard, which was what we were going to put on, but then we kind of morphed into a 111 trade. It actually turned out a little bit better, in my opinion. And then we put on a oil 112 trade today. And I still think there's other opportunities in bonds and oil and potentially even in ES today. But got to be a little careful with what you're doing. I also put in a SPY leap trade today. It's Monday. It's what we do on a Monday is put SPY leap trades on. So I'll share some of those with you. And let's get rolling. So stick around. I'll share trades. Let's take a look at the markets for you as well. Let me get off the screen. You can see everything here. Let's start with the ES. The S&P dropped about 1.1% today on the whole. Now you can see here as we're looking at both the weekly chart on the left and the daily chart on the right, we've been just in this, nice range here for really 2 full months now. So for pretty much all of November, all of December, we've been in this range. We've had some significant down days. We've had some significant up days. We've had a pretty strong, longer trend that lasted 3 weeks, sold off for 2 weeks, bounced back last week a little bit, and then started this week off with some selling today. Now, what you'll notice too is that here on the right-hand chart, we came down right to this previous pivot point that was resistance, turned into some support back here, support again. Then we ran up and we came back down. We touched it today and then we did bounce. So we were down about 100 points at one point today and then bounced off of that to finish down really about 70 points on the ES futures. Now, MACD rolling over, RSI sinking lower, squeeze looks like maybe firing to the downside, stochastic momentum tipping over a bit. So the daily doesn't look great. We'll see if the support holds. If it does not, and again, we're right at the Bollinger Band as well, and the 50-day in pink here, or purple, whatever you want to call it, fuchsia. But that's the 50-day exponential moving average. So all of those kind of held together today, but it doesn't mean they'll hold tomorrow or into the rest of this week and into the new year. However, we have another support level down here, about 5,700. And if we look at the weekly chart, you can see both of these support bet levels, previous highs, previous support levels, so previous resistance, previous support. So we'll see if these can hold in there for the markets. If not, maybe we come back down to the 5,600 level or so, which would be, I don't know, like not quite a 10% pullback. So somewhere in there, 5,400 would be about a 10% pullback. I think 5,600 makes some sense. 5,400 could be it, 10% pullback. I'm not saying that that's happening right now, but things don't look fantastic. I would think maybe we're going to get another bounce. We could also be setting up for a head and shoulders pattern here. Here you've got the left shoulder, you've got the head, and then maybe this is the right shoulder. I don't know. The daily, it's a little kind of a little wishy-washy, but if we break this 5,900, I definitely think we could drop to this 5,700 pretty easily here. So taking a look at ES, I'm still not convinced that we're dropping to 5,100 or some crazy thing. But I definitely think a 5 to 10% pullback could be in the works. It may not happen for a month. It may not happen for a day. It might happen in an hour. Who knows? I think it's coming at some point, but I think that's super healthy for the market. I think that would be great. All right. Oil. Let's take a look at oil. What's oil been doing? Oil has been just kind of sideways traveling as well in this kind of value area here. It's just continued to sideways move really for 3 months now. So most of October, November, and now December, you've been in this uh, you've been in this volatility box, as Don Kaufman would call it, or really this value area. And looks like things are picking up a bit. MACD, RSI, squeeze, looks like it might trigger to the upside. Stochastic momentum starting to turn back up. So some decent positive movement up. I don't know if oil's really got the mojo to break up into the upper 70s here, but maybe it will. If it breaks out of this box, I certainly think we could get a run to 78 or so. Again, I don't know if that's a huge move, but I think that's where we could be headed. If we're looking at the weekly chart here, on oil, same thing. Everything's lined up for oils to move higher, but I really don't know what that catalyst is that would cause oil to move higher. Demand seems to be a tad weak across the world. Supply seems to be fairly healthy and strong. I think you're going to see the US bringing more supply online. So if you've got a ton of supply and not great demand, I don't know how that's really good for pricing. So I'd like the oil prices to kind of stay neutral here. I think strangles on oil are really good, or 112 trades right now with a little bit of this bullish bias that even if we drop a tad, drop into a trap, we could be seeing a nice trade setting up on oil. Bonds, I'm liking what bonds are doing here. I'm not jumping hog wild in. We've got two bond trades. We did have a support level here, which was a previous pivot level. Then it was support again, and we tested it a bunch of days, bounced off of it, came back down, tested it for 3 days, and then finally broke a week ago, broke down to the downside here. But a nice big bounce today. Kind of a first reversal day on the squeeze momentum. RSI coming from oversold. MACD had already started to reverse higher, and stochastic momentum now also starting to tick up. Is this a temporary, at least, bottom for bonds? Is this the bottom for bonds? Or is it just a little bit of a bounce in the downtrend, and we just keep falling lower? Right now, I don't see any reason to get ultra bullish, but I'm also not super bearish on bonds. And if we take a look also uh, at this, we can see a bit of a channel developing here as well on bonds. So we've been really just in this channel, top, bottom, top, almost to the bottom of this channel in bonds. Making sure we touch it a handful of times. But you've got support levels here. This support at 112.5, I think, is not bad. The weekly is getting long in the tooth on this selling. I just think bonds, this is not a bad area. We're in strangles. I like where we are on bonds. I'm not adding any trades because I already have a couple on, but if I could, not strangling yet, but I really would start to consider some put credit spreads. If I want to see more follow through and more bottoming. All right, gold, same thing in this tight window that we've been in for uh, two full months now. Great strangle on gold, good put credit spreads, good call credit spreads. Pretty much anything that you're doing on gold outside of just buying options uh, has been working. So if you're selling premium, This is what you want to see, nice sideways action. Little weaker, but maybe we're a little overdone on gold here. If we break out of this value area, then maybe we head down to the 2,500 level. I don't know that we see a major issue in bonds. I don't really know what that catalyst would be. You got a strong dollar. It's putting some pressure here on gold. I think the dollar maybe it goes a little bit higher too. But again, I think just like bonds, kind of like the ES, I think everything's just a little tired and just needs a little bit of a break. And I think the same thing is true with the dollar. They've all had really good runs to either the upside or the downside. I just think a break is coming. Uh, and a break doesn't mean it's breaking down. I just think, things are just tired and needs a little pullback. All right, we're just in this sideways pattern as well on copper. It looks a little worse, obviously, than gold. Gold's fighting around the highs, the all-time highs, and copper has already come way off of its highs. Symmetrical triangle could be breaking down here. I don't know that it has a ton of ways to fall. I think it's almost a little overdone. We'll see if we can get some support here around the $4 mark on copper. Not willing to trade it yet. Silver looks worse. The silver's already broken out of that volatility area here. So I can even take that off. And right now, until proven otherwise, silver is just a downtrend. And it broke its, it's either ascending, not ascending, the ascending trend line here. It broke. So that trend line is no longer valid. Here, we're just watching for now some support and resistance levels, which are very muddied in here. I think we just watch for moving averages. I don't know that silver has a bottom yet on it. This also could be a dreaded H pattern for the most part. So this could be a H pattern here. This is not a good sign on silver. All right, the Aussie dollar. This thing's just been in a channel to zero. Now, I know it's not going to zero here, but strong dollar, bad Forex. This thing has just gotten absolutely murdered. If you're trying to play it any way but down, you have not had a good time with it. We have stayed out of this thing for a long time. I have not tried to call any bounces on this thing, but I think it's overdone and wouldn't surprise me to see us starting to put in some sort of a level here. I don't know if we've got a longer term chart on it. We could actually probably look at this low here on the monthly chart. This monthly low is about 61.81. So if we go 61.81, 61.81, kind of right in this level. Now you are getting pretty close to this previous low. Maybe we hold some support there. If not, from there, I mean, things look pretty doggone ugly for the Aussie dollar. I don't know that it get that ugly, but I think in here, there's some support for it. I'm not going to play a bounce yet, but we'll see what happens. We look at the NASDAQ doing much better than the S&P, still holding this ascending wedge that the S&P broke. We haven't really broken it yet on the NASDAQ, but that could be coming. All the internals are down. The weekly's down, the daily's down. Things don't look great, except for the fact that you still have this trend line that we're holding. We have the 50-day moving average. We have the Bollinger Band here. Can we hang in there, on this thing and get a little bit of a bounce to the upside? Is there anything more left in the tank? It looks better. I like it better, but I think you got to be very cautious. And then the Russell just does not look good at all here, except is it overdone? But is this, again, an H pattern here, which means this thing could significantly fall further? I think any more weakness here makes this a really interesting opportunity for me for 2025. I won't be just trying to catch the falling knife. We'll play it smart. We'll see what happens. So anyway, there's kind of the long and short of what most of the futures look like. And let's take a look at some trades. And I will share my screen and let's get into what did we do uh, today. So here is the account for the Income Navigator account. And we're sitting here on we closed out a 112 trade on oil. We still have another one up 72%. Okay. We have a strangle that's up 15%. We tried to get a new trade on today. It did not fill, but I think I will continue to work that trade. I looked at about 77. I didn't love the DT. I would like a 60-day DTE. Didn't see what I liked here, but something around like, let's say a 112, 64, 63 put debit spread selling something around the 54 for a 112 type of a trade. I think this sets up decently here. This is what I would be looking at potentially for a 112 trade. Did not get a fill today. We'll look again tomorrow. You're taking it, in the tail here. You can make 460 bucks on $5,500. That's an 8% return in 77 days, which is just over 2 months. So just about 4% a month on this trade. So I like it. I think this is where we want to be. We'll look to get this trade on again tomorrow. I don't know if I'll do after hours. Don't really feel like working into the late evenings here, but maybe. All right. So ES, let's take a look. We have a ton of stuff going on. Most of the stuff in ES here are all of our put debit spreads, a couple of our naked puts uh, that are working here. These are fine. Yeah, it's only been on for 14 days. We're fine with these. We've got a 30-day hedge that we just added today to go along with our trades. We have such a large realized gain this month that I feel like I can spend a little extra money on some hedges. So we do have a 30-day hedge running here. We've got plenty of the volatility hedges running. Most of these are obviously losing on the longs, but we've already closed the shorts for winners. So it shows a P&L loss, but we've already booked all the P&L gains to offset it. So these are good. One of the trades I really like that I've got running here is this Jade Lizard on ES. And this kind of led to another trade today. So let's take a look at this trade and then we'll take a look at how we wanted to form it. So with the Jade Lizard, you're typically selling, I'm sorry, selling a slightly out of the money call credit spread, and you're also selling a naked put um, here. So on this particular trade, that's what we're looking at uh, on this setup. I love the fact that we've got this nice long tent all the way down to really 5,100 here is the bottom of this thing. We could actually go close to about 5,200 or so um, down here. And then we're already in the tent, so could be a nice return on this trade. So what I wanted to do was I wanted to duplicate this trade because I like the way it's acting. We're 12 days in, we're up 25%, we're up 800 bucks on this trade. It's so basically like a 111 style trade. It has the same characteristics as a 112 or a 111 trade, any kind of the 11X bear trap trades. So what we did today was, and I'll experiment and I'll tell you kind of what we did. I go about 60 days or so, and we looked at selling. Sorry, let's reverse that. All right, so we looked at something along these lines. Let's do 5,300. I think it was more like 5,200 or so. So here's a short Jade Lizard that we looked at today. Let's clean this up. So here's the Jade Lizard that I had set up today, which is basically setting it up like a 1-1 or a bear trap style trade. You got the big trap, you got the tail, you got no risk to the upside. So setting this thing up just this way, I mean, bear with me on it. Okay, here's our calls that we have now. I sold these, so it's a short jailers because I sold these calls and I sold this put as well. So we're taking in a decent amount of credit. We're taking in $313 in credit. if we stay above the trap, we make 313 on 6,200. So 313 on $6,200, it's about 5% in 60 days. Not exactly where I want to be, but it's not terrible. Okay, on this. Uh, and down 5,200, I mean, that puts us at over 700 points of the downside, which is well over, 10, probably 12, 13% somewhere in there to the downside. Doesn't mean we can't hit that. But I do like the trade setup. And if we stick anywhere in this trap for any length of time as we decay, this thing will start to really pay off 5 times more. All right, so this was one trade that we looked at, and then I wanted to take a look at what would happen if we just turn. Now remember, this is 6,200 in buying power to make 313. And what I'm going to do is let's screen capture this thing for a minute, just so that I can uh, keep that trade and explain to you what I may look at here. And what I was thinking of, and let's get into this trade. Prices are kind of funky right now and after hours. Let me make sure that I can. Uh, okay. Uh, let's just stick with 5,200 down here. So naked put at 5,200, and we're going to do all puts. So we're going to turn this thing into. Let's just use these two, which we've already used. And let's take a look at what this thing looks like. So here's the 111 version of the trade that we were just looking at. It's pretty much the same setup um, as that uh, as that Jade Lizard, short Jade Lizard that we put on, but this is an all put version of it. Uh, Now, before we were taking about 313 on 500. Here we're taking it, this is costing us about $10,000 to do this trade. 200, yeah. So something along these lines uh, here today. And let me just double check the table. Yeah. So here's a trade. Again, towards the end of the day, it had changed a bit. But this trade is pretty much the same basic setup. We're just using all puts instead of the put call on it. BP a little bit higher here. So before we were at, um, I think $6,200 to make 313. Here we're using 435, or making 435 on 10,000, which is only about a 4% over the same time frame. So it's not quite as advantageous as the Jade Lizard we just looked at, although earlier today, this that's really because this thing is not priced right in here. So see if we can get. This is probably closer to what we did earlier. Okay, so here's what we did. Yeah, the pricing on those strikes. So I had done about a 20 wide here on the put debit spread. Okay, and let's just say the 5,200. I think earlier for me, it was about 5,175 or something like that. So here we're taking in $880 on credit, or $880 credit, which is 440 bucks. 440 on 6,400. So instead of the 313 that we had taken before, this is 440 on 6,400. So 440 on $6,400. Now this is about a 7% return. So we have a little bit higher return, same buying power as the Jade Lizard, the short Jade Lizard piece here. This one's giving us uh, a little bit more income on this trade. So I do like this trade a bit. There are a couple, and I like the 20 wide. I thought that worked well. Um, for the most part. You could do a couple different versions uh, of this thing, but I thought the version we had some weird pricing going on here. 5980, 6,000. Just anywhere in this range here. But the thing I like about this versus the kind of the standard 111, so I'm calling this an at the money or an ATM 111. It's not a 112, so we don't have a ton of risk. We have the one naked put. We can always either roll this out, we can close this trade for a loss. It's uh, not a huge issue here. If we took a 2x loss on this, it would be basically 22 bucks. Here, it'd be like an $1,100 loss for us, which is $1,100 on a $360,000 account. Here would be like 0.3%. So we could do a 2x loss on the naked puts here. And I just like the fact that you've got this nice trap. Now, if you wanted to grab a little bit more cash, or a little bit more safety here and a little less cash, you could do this one. This is giving you 365 bucks on 4,300 in margin. This is an 8% return, and you're a little bit further out of the money down here. So even if we went a little further here, that's not quite as advantageous. So the 5,100, yeah, the pricing's bad. So the 5150 pricing is not bad. I think the prices are a little bit bananas right now in the aftermarket because things are closed. But we'll see. So this one's not too shabby here either. This one gives you 330, which is more than the 313 we were getting for the Jade Lizard version. And we're using 4,700 versus 6,200, a lot less BP. And this is a little bit bigger trap. I do like this trade. We're starting off in the trap. We could still come up here out of it, which would give us a nice return. But if we stay in the trap, you're making 1,330 bucks, using about 4,600 and some odd change. That's like a 28% return if we get in here. So that's the trade that we're looking at the money. At the money 111 trade is what we got going for that. And then we did do our monthly or our weekly SPY. We sold our naked puts. We did add portfolio margin back into this account just to bring the SPY leaps back into here from the investing account. They really don't fit in an investing account. They're an income style trade. They take about 42 days. So they take a little bit longer, but I've been averaging 41 days on the SPY leaps before they hit profit. And I just brought those back into this account. So we got a little bit of a mixture now of, SPY and portfolio margin on that, as well as span margin on our futures, which I like the way we're set up in here. Account's big enough to handle it. So I reactivated the portfolio margin to bring those back and make some sense. So there's our trades for now on what we're looking at, and I think we're going to be diving back into some better trades too in the other account. NVDA to me is pretty fairly valued here at about 140, 130. I think 130, 125 is perfect, but I think even at 137, NVIDIA is pretty well fairly valued. You got earnings coming up in February. I think we could look at something. I might even go like this February 21. I think you can, as IV will start to build a bit potentially on it, but I wouldn't mind owning this thing at about 120. So if we took a look at selling like the 120 naked puts on this thing, you're taking in roughly $3 on 787 in buying power. That's not at 300 on 787 is a pretty good rate of return. You're looking at 38% in 50 days. And if we drop below, I think owning this thing at 120 is not the worst thing in the world. So I do like where NVIDIA is. I think we're pretty well valued. I'd like to actually own it here. But one of the ways I'm looking to potentially play it would be, let's say we like the 120, but let's just go a little bit let's go to 115. Okay, but let's also enhance this thing a tad with a bit of a put debit spread, like a 112 style trade. And I'm going to double these. And let's actually take these down to 110. Let's do that. Okay. So let's put this trade on and take a look at NVIDIA as a 112 trade here as well. So right now we're sitting up here. If we stay in the tail before earnings, and this thing decays, we're going to make $251 on this trade using $944 in margin. This is a 26% return. If we drop down here, okay, and drop into the trap, okay, now you're looking at making doubling that to almost $451, or you could even take assignment at 110, which to me is not the worst thing uh, in the world. We could also shuffle some of this up a bit here. It still works out really well. You want a little bit bigger trap. Let's look at like the 130, 125 in here. You could still do something like this, okay, which gives you still $138 in the tail, 138 bucks using 837 again in a portfolio margin account. This is a 16% return if we stay above 130. We make 16%. If we drop anywhere between 110 and 130, we could potentially be making nearly $600 on that 837, okay, which gives us around a 72% return. And if we come all the way down here and we happen to hit the 110 or further, I'm happy to take assignment at 110. I think owning NVIDIA at 110 would be a great opportunity. I would gladly take hold of a couple shares in here. So again, not a huge trade. Size it to your account. How many shares of NVIDIA would you take on board? I mean, I think I could do at least four contracts at the 110 there. So I think that would be not an issue. You're taking maybe $44,000 worth of notional, but from a BP perspective, if I was to just buy NVIDIA here and I bought 400 shares, okay, I'd be using about $8,000 in buying power to do that trade. So certainly could handle $800 in buying power to own this thing down here at 110. All right. So anyway, there's a trade idea for you. If you want to go a little bit lower, you certainly can. If you wanted to do, um, something, anything else, you guys can play with it. But I wanted to share this trade with you. I kind of like what we look at here. Even move this higher. I think this version's not bad at all. Here, and you want to get even safer, you want to go 105, something like that. Okay, now you're not really making much money in the tail, but if we do drop, okay, at all, you have a pretty good opportunity here. And if we take kind of the same tact that I was showing you guys before with the at the money version, okay, let's say this is 3 wide. Let's take a look at this one here as well. And we went down to 105. Now, this is a 112, not a 111 version of this same trade. Um, all right. So here's a little different way. This is still $124 in the tail, no risk to the upside. You make $124, and this is a 733 margin trade. So this is a 17% return here. And if we stay right where we are and we drop anywhere between 105 and 140, which we're not even at 140 yet, but if we drop, I mean, you're talking a 30-point drop, a 30% drop in NVIDIA to even worry about assignment here. But if we drop anywhere in this zone, 324 bucks divided by 733 is 44% return on your money in 53 days. So those are some of the things that I'm looking at for trades for me, trades for our members. And if you got some value out of this, certainly let me know. I'll share one more thing with you. Let's hammer up the trade tracker, see what we did today, and we'll wrap it up for you. I know this is a little bit long for you, but hopefully you get some value and you get some trade ideas out of it. So let's take a quick look. Here's the trade tracker for today. We booked another 800 bucks. We are up $26,000 in realized gains this month. Booked another 800 today. That trade today was an oil 112 that we closed. So oil 112 that we closed, but we've booked $26,000 in realized gains on the account this month, which is our number one best realized gain month of all time. Now we have one more day tomorrow. Who knows what can happen tomorrow? Okay, but we'll trade what we see and we'll wait for it tomorrow. All right, I hope these ideas, I hope what I'm doing here, I gave you guys some value. And if you liked it, please click the like button down below. It could really use the help of getting the word out to people. Just trying to share my trades. If you get some ideas off of them, great. If you don't like them, it's okay. Don't follow, move on. Plenty of other places out there for you. But if you do like it, click the like button. If you're not a subscriber, subscribe. And if you want to join us in the Discord and see the real inner workings of the trades and what we're putting on, come and join us. You can see it in the description down below. You can use my code KING to get 40% off the first month. Give it a try, see what we're doing. I guarantee you'll get some great ideas and some really good education out of it. All right, have a great rest of your day. See you guys tomorrow. Stay safe. Bye-bye.